What's up, millennials? In exchange for your time, and hopefully you like as well, today we're going to talk about a company called XL Fleet, and we're going to look at its valuation today, right? So XL Fleet is a company that has gone public today actually via a SPAC merger. The SPAC was actually trading under the ticker symbol PIC, but right now XL Fleet is trading under the ticker symbol XL. Now, usually when I make these videos, these valuation videos, I usually say that the SPACs or the companies that have gone public via a SPAC merger are actually undervalued. But right now in this video, we're going to see that XL Fleet may actually be overvalued, especially if you compare their numbers with a company like Hyliion, for example. And during this video, I'm also going to let you in on a little secret. But before we start, three things first. First of all, if you would like to support this channel, you can comment below this video. Comments for the YouTube algorithm are a little bit more important than likes, for example. Secondly, Stock O'Clock. These are very short videos that I make every single trading day, very short 1-minute videos with news about the stock market. And third, as always, never trust me, always verify me, right? I'm just documenting my journey here. I'm just a random dude on the internet. I'm not an expert and I'm certainly not a financial advisor. Cool, let's get started. Let's first take a look at the pro forma valuation. And for this video, I'm not going to do an introduction for XL Fleet because it's very likely that you already know this company if you clicked on this video, right? So as always, or as almost always, we are going to use a base share price of $10 per share as per the investor presentation of XL Fleet and the SPAC that acquired XL Fleet. So that's the price that I put in my Excel sheet over here as well. The amount of outstanding shares after the merger are going to be around 143.8 million shares. So that's what I put in my Excel sheet as well. So that is going to give us a market cap, or an equity value as they call it, of about $1.4 billion. The thing, however, is that they are also going to have $350 million in cash. So that's the amount that we need to take off the market cap to arrive at an enterprise value of about $1.1 billion. There's a slight difference between the 1.188 and the 1.187, but I suppose that's because of rounding differences, right? The thing, however, is that the price of PIC, first of all, went up to about $19.54. I'm not entirely sure where XL Fleet will be trading today because right now the market hasn't been opening just yet. But let's just take the price of $19.54. So that means that the market cap has gone up from 1.4 billion to about 2.8 billion. And that also means that if you still take into account the amount of net cash on the balance sheet, that the company itself, so the enterprise valuation, is going to be about $2.5 billion. Then the next step is going to be to look at the future enterprise valuation. And for this part, we're going to be using similar EBITDA multiples that we also use for Hyliion. Now, I know that Hyliion is a slightly different company, but I do believe that we can use the same EBITDA multiples for XL Fleet and Hyliion at the same time. And also, if you're a little bit confused about what this all means, like the EBITDA numbers and the EBITDA multiples, then maybe check out the video about Hyliion's valuation that I posted on Sunday, right? So let's first take a look at what the expected EBITDA of XL Fleet is. And for this, we're still going to use the investor presentation. In this slide over here on page 25, we can see the expected EBITDA numbers of the several years. So if we go to 2024, we can see that the expected EBITDA is $308.1 million. And that already shows you that it's about half of what Hyliion is expected to do. So what we're going to do is we're going to use these EBITDA numbers and EBITDA multiples to arrive at a future enterprise valuation, okay? How do we do that? Well, we first take the prospected or the expected EBITDA, which is $308.1 million, and we're going to use EBITDA multiples. We're going to use the EBITDA multiples that we also use for Hyliion, which were 7 to 9x. So first of all, for the low valuation, we're going to use the low EBITDA multiple of 7x. So 308.1 times 7. And that gives us a low future valuation of XL Fleet of about $2.1 billion. I put the exact same number in my Excel sheet over here. So let's do exactly the same for the high future valuation, right? So 308.1 divided by the high multiple, the high EBITDA multiple of 9x. And that gives us a future high valuation of about $2.8 billion, which is also the number that I put in my Excel sheet over here. And now if we scroll to the left-hand side, we can see that a midpoint valuation, so basically the average of the low and high valuation, is going to be about $2.5 billion in 2024. So take that into your mind. For the next step, we're going to take that future valuation, or those future valuations actually, and we're going to discount them back to the present. So we have been looking at EBITDA multiples and EBITDA numbers of 2024, right? Right now, we're almost living in 2021, so we need to discount it back 3 years in time. And we also need a certain discount rate for each year that we are going to discount it back for. We're going to use a discount rate of 20%, which we also use for Hyliion, so that's going to stay exactly the same. So let's now use the calculation, okay? Let's first take a look at the low future valuation, which was 2.1567. And we're going to divide that, first of all, by 1.2. The 2 here is standing for the 20% discount rate. We're going to do that to the power of 3 because we need to discount it back 3 years in time from 2024 back to 2021, right? And that is going to give us a current enterprise value, a discounted enterprise value of about $1.248 billion. Okay, then we're also going to do that for the high valuation. So we said, all right, the high valuation in 2024 is going to be $2.7729 billion. And we're going to apply exactly the same formula. So we divide it by 1.2 because of the discount rate of 20% to the power of 3 because of 3 years. And that is going to give us a high discounted enterprise value of $1.6 billion. And as you can see, my spreadsheet already calculates the midpoint valuation as well, which is basically the average of these two numbers, the low valuation and the high valuation. And there you're going to see that the enterprise valuation right now, discounted back to the present, is about $1.4 billion. And then finally, the only thing that we now need to do is to add the amount of net cash on top of the enterprise valuation to arrive at a fair market cap. And then we can also use the market cap to reach or to get to a fair price per share, right? So we said, all right, the low valuation is 1.2 billion, high valuation 1.6, midpoint is 1.4. If we add then the amount of net cash, which is 350 million, so $0.35 billion, we arrive at a low fair market cap of 1.6 billion, a high of almost 2 billion, and a midpoint of almost $1.8 billion. So those are the fair market caps, if you will. And in the beginning of this video, we also said, okay, they're going to have around 143.8 million shares outstanding, right? So the only thing that we need to do is simply to take the market cap of 1.8 billion and divide that by the amount of outstanding shares. And that is going to give us a fair price per share, a midpoint price per share of $12.35. So the low valuation would be $11.11 and the high valuation $13.59. All right, so there you go. A fair midpoint price per share right now would be around $12.35. And in 2024, the fair price would actually go to $19.50, which is almost exactly the same as the current price for XL Fleet. Before you leave, a few things first. First of all, I'm going to give you the secret that I promised you at the beginning of this video, right? So there are rumors that an important person on YouTube is going to release a video about XL Fleet saying that he or she is going to sell his or her shares of XL Fleet. The second thing is, don't trust me, verify. I said that at the beginning as well, but always stay critical, think critically. And the last thing is that we have taken into account assumptions, right? We have looked at predicted revenue numbers, a certain EBITDA number, a certain EBITDA multiple as well. So keep that into your mind. Make sure that you know that if one of these variables change, the entire calculation is going to change and the entire fair price per share is going to change as well. All right, with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye-bye.